Good morning, everyone, and welcome to Wednesday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, stock index futures have been trading around unchanged most of the morning. So we're down slightly at this particular moment. Now, there's a lot of activity going on in the rest of the market. We've got gold up $100. We've got natural gas up another 20%. We've got Bitcoin down $2,000, $2,500, depending on when you blink. So there is still a lot of pre-market activity going on out there. Here's a funny situation. A lot of people have been talking about President Trump doing some insider trading with Netflix. Now, apparently, he bought the bonds, not the stock, and the stock has continued to move lower. And this morning, it's down. It was settling on the bottom of our projected trading range, but it is down another 6-7% in the pre-market this morning. So for anybody who took President Trump took his cue to jump into Netflix, it certainly has not worked out for anyone. Looking at the VIX or the fear index, and seasonally we're looking for the VIX to move up, and that's certainly what it did yesterday. Whether you're looking at the VIX for the S&P 500, which headed up over the 1875 level, didn't make it all the way to 2188, and then possibly $25. We'll be watching those numbers today. There's the VIX for the NASDAQ popping yesterday and for the Russell 2000. So we came into this week with the VIX on a buy signal. That's usually negative for stocks. Looking at the world of currencies, the US dollar rolled over. Big up move in the Swiss franc yesterday. And of course, Davos is in Switzerland. And it's certainly got the benefit of all the publicity yesterday. There's the euro popping. Canadian dollar was up, not enough to give us a buy signal. And of course, Canada being the US neighbor, we're the ones to fear the most from any idiotic things that the president does going forward. Looking at the bond market, bonds tumbled yesterday. Denmark announced that it's dumping $100 million in U.S. treasuries. If other countries continue to do that, of course, that's going to put upward pressure on bond yields. And if you're president of the United States and you're willing to put the Fed chairman in prison because you want him to lower rates, look at what all the presidential action has done over the past couple of months as rates continue to spike higher, and that's not going to be a good thing for the economy going forward. Looking at the world of mining, we had copper roll over yesterday, so it is back on a sell signal as of Tuesday's close. Unlike gold, gold was up $170 yesterday. It's up another $100 in the pre-market this morning. Platinum's holding up fairly well, still on a buy signal here, and then silver made new highs yesterday. It's going to make more new highs on Wednesday. Looking at the world of energy, we had crude oil up $1.02 yesterday. Natural gas was up nearly 20%. It's up another 20% in the pre-market this morning. So natural gas spiking sharply this morning. Then looking at the Canadian markets, yesterday we did have materials and utilities were positive, but then go all the way down to the bottom, and you had Infotech down 3.95%. We'll get to that in a minute. So the iShares for the TSX 60 back on a sell signal. The bull ETF for the TSX 60 is back on a sell signal. The bear ETF for the TSX 60 is back on a buy signal. So today we can switch. That is also true for all the major U.S. indices. We'll get to those in a minute, but I won't go through all the bull and bear ETFs. We don't have enough time this morning. There's the Vanguard Canada ETF. It is still on a buy signal right now, even though it was down yesterday. And a lot of that has to do with small mid-cap stocks. The markets outside of Canada certainly sold off yesterday, down a little over 2%. So that ETF is back on a sell signal. Then small caps moved up yesterday. Micro caps moved up yesterday. And so there's a new high for small caps, new high for micro caps on the venture exchange. Then looking at the energy sector, we had a pullback. We're trying to break out and make higher highs. We made a higher high yesterday, but reverse. So that's a bearish reversal day. And you can see last time we've had bearish reversal days that mark the top. So we'll be watching for that closely to see if we get fall through to the downside today. If we don't, if we the first close above yesterday's high gets rid of that bearish reversal signal, it just takes it out of play. Looking at financials, they rolled over yesterday, so we're on a sell signal. We're on a sell signal for the banks as of Tuesday's close. Then gold stocks continued to move up on Tuesday. Unfortunately, tech stocks rolled over. They've been on a sell signal for a week now. And of course, Shopify is the elephant in the room when it comes to the tech sector. We were looking for a move down to 187.50, but we stopped at the big round number of 200. We closed at $200.06. So $200 is currently acting as support as we broke through the 203.13 level. Of course, if $200 starts to break, which it'll probably do today, then 187.50 is our mathematical target. But notice back in November, we did not get all the way down to that level. So we'll be looking for support at the November low. If that is taken out, then 187.50 is our next target for Shopify on the TSX. Looking at the U.S. market, did anything work yesterday? Well, consumer staples worked, and that is certainly what one would expect in a really bad day. And Infotech was the big loser, down nearly 3% on the day. So there's the Vanguard Total Market ETF rolling over. It's back on a sell signal. Similar situation for the Dow. For the S&P 500, remember last week we were watching to see if we could break out above our price target of 695.31. Next target would have been $700, but the market couldn't do it. So here we are moving down 2 lines in a bit. The market's going to be watching to see what happens at the 100 and the 200-day moving average. Now, the 100-day moving average acted as support back in November, so that's going to be critical for the market to hold that level. They're going to get very bearish if we start breaking down below the 100-day. They'll be expecting a move down to the 200-day moving average. Looking at the NASDAQ, and last week we were talking about the open gap over here on our way up to the 632.81 level. That didn't get dealt with, so here we are moving down. And we've got the NASDAQ 100 back on a sell signal as of Tuesday's close. Of course, you're looking at sell signals at the for the S&P 500, for the NASDAQ. The bull ETFs are giving sell signals. The bear ETFs are giving buy signals right now. Now, the Russell 2000 small caps and micro caps all held up fairly well. They're still on buy signals. There are commodity stocks in this grouping of stocks, whether you're looking at the mid cap, small caps, or micro caps, but it's not that big a deal. But really, the aggressive selling came from the futures contracts that are attached to the major index ETFs. And, that's how global players, that's how institutions around the world would trade the U.S. stock market, is using the S&P 500 or the NASDAQ 100 ETFs. And they certainly aggressively sold those yesterday. Now, energy stocks in the U.S. were down ever so slightly yesterday, so no big deal there. We were trying to get out above 48.44. If we could do that, if we could take out last week's high, then a move up to $50 could happen. Looking at financials, they've been on a sell signal for a few days now. They continued lower yesterday, holding support at the 53.13 level. You can see our next target to the downside. Then looking at U.S. banks, they traded down to the lower channel line, but did not close below it. So we're about 20 cents away from generating a sell signal there. Gold stocks, of course, continued to move higher yesterday, up 5.7% on the GDX. Of course, silver stocks, everything else related, was up yesterday. Semiconductors came down 2.5%. We're still on a buy signal here. We traded up towards the top of the projected trading range. We got as close as $1 and change, I think, from hitting that target before pulling back. Here we are settling at the 390.63 level. We closed at 390.39, so pretty close. Next target to the downside is 375, which is going to be an important level for the semiconductors. If you follow back here, we took a run at that in October. We took a run at that in December. And then at the end of December, we plowed through it. So the market is going to be looking for support at the 375 level. We'll have to see if it holds. Okay, folks, that is all for this morning's presentation. I thought I'd cover a lot of topics this morning. The markets are having a pretty wild day out there outside of the stock market, and it'll be really interesting to see if the world continues to sell U.S. bonds. Again, that's going to put upward pressure on bond yields. That puts pressure on interest rates. And of course, that's not what the president is looking for. And yeah, he'll basically he's thinking of putting the Fed chairman in jail if he does not start to reduce interest rates, which would be against what the market is looking for right now. Enjoy the rest of your day. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.